All right. Let's see what we got going on today. Let me... Okay. Very choppy morning. All right. All right. First and foremost, hourly chart. See what's going on the hourly chart. We're hovering right above that, holding that 200 on the hourly chart. Holding it pretty good. So, some upside potential here if this thing can continue to hold that 200 range, the 200 EMA. 15 minute. We got a pivot point and the 200 down there on the 15 minute. Holding it pretty good. So possibly, hold on. Those pre-market lows are at 25,278. So we do have pre-market lows down here. We have that 200. We have the pivot point down there. So we have a lot of support coming in. Pre-market lows are at 25,000. And then 5 minute. We'll wait for this 5 minute range to kind of set itself in. We got 1 minute left till this 5 minute range gets set. I'm gonna go ahead and mark out the top of it. And then 5 minute. We'll wait for the top of that 5 minute to kind of set itself in. We got 1 minute left till this 5 minute range gets set. I'm gonna go ahead and mark out the top of it. And then the bottom. Top of that 5 minute. Hello? Hello? And then oh crap. All right, there's that 5 minute range. I think that's good. I would just wait to see what we're holding that. We're holding the 200. So waiting to see what happens here. I mean, we're holding the view op, sorry. So the question is, will we get displacement or below or above the view op area to continue that trend? All pre-market, it's been kind of on an uptrend pre-market. It's been kind of making higher highs, higher highs. This is the first lower high that it's making right now, so. All right, starting to kind of break back below. We got pre-market lows down there possibly, so got to keep an eye out on that. We'll see how this candle closes. All right, closing under that 5-minute range low. Get a possible pop up. Paying attention. We have 278 pre-market lows down there. Seeing if we could get a quick pop up. I would like to get a short entry at that 337 level, possibly, if I can get it. If we can get this quick pop up. Let's see if we can get buyers kind of step in, and or if this thing just leaves without me. My entry would be right at the top of that candle for it to fill that imbalance pretty much. Alright, I'm gonna go for that 292 level down here. 29. Kind of targeting these lows. Would have let's see, and hold. We got pre-market lows down there holding view op, rejecting off of view op, sellers coming in aggressively back in. We got to continue holding view op to the downside though. We got those pre-market lows down there, so price could want to come down there. To be honest with you, I'd have my stop above, like right here, because if price oh crap, like if price would get up there, I don't even want to be in that trade. So coming back down. Just want to take out these lows. That's not even, this isn't even pre-market lows yet, but I just want to, there it is. Boom, TP hit. All out. We still got pre-market lows, but I'm at the point where I don't want to be greedy with this, right? We're at a support level where this thing could sweep this low and start reversing off this low. Also, there's equal lows right there, so that's another reason kind of why I took profit there. And I was getting a better than it was a better than a 1-to-1 risk to reward. So base hits add up. If you look on the 15-minute chart, you see there's these equal lows right there. We got this low right here and here. So. But I think it's going to sweep pre-market. I mean, it's going for pre-market lows. I think it just took it out. Did it? Yeah, just took out pre-market lows. So perfect short. I mean, that was an amazing short entry. You can't ask. That's like a perfect setup. Can't ask for a better setup than that. Now we wait and see what else happens. Right, we're at an area where buyers could start aggressively stepping in. We're at 942, so also that's another thing. Was there an SMT? I don't really pay attention to SMTs. I don't know if that's something I should look into. I know, unless did I gotta pull up ES. Did ES take that high? Because NQ failed to take pre-market highs up there. Right now we're at an area where you got to be careful. Also, if you look on the hourly chart, we're hovering right at that 200 right now. So there's a pivot point right there. We could easily get a bounce around this area. This is always kind of the line in the sand. This is a tough area. We've been just kind of grinding sideways at the 200. But, I mean, you could see what happened, right, at 8 o'clock last night. I mean, we perfectly rejected that 200 at 8 o'clock last night. Just a perfect rejection back down off it. So, the 200 on higher time frames is something you should always keep in mind where it is. Now we're, so we got this resistance here, seeing what happens here. Obviously, I don't want to short again. There's just no point in trying to short this again when I already caught the move. I told you once we kind of broke down below that 200 the 5-minute range, and sellers aggressively broke through it, leaving behind that imbalance. That imbalance gives you the perfect opportunity for a short, because you have the 200 now as resistance, you have the 5-minute low as resistance, you also have the view op there as resistance. So you have 1, 2, 3 different things that are holding. Actually 4 if you count that imbalance right there. So technically 4 different things in one area that are keeping price down. Maybe I need to learn how to leave some runners on the. I don't know if I should. I don't know. Every time I try it, it doesn't work for me. But then the days that I don't try it, it just freaking just trends down all. I mean, on this trade, there would be really no runners to leave because pre-market lows are already. We've already taken it out, so. Unless this thing's building structure to go to the upside now. Kinda seems like that's what it's doing. Waiting for that maybe 10 a.m. reversal time. And I wouldn't be long biased until we get above the view up area. Above the view up area, back into that 5-minute range, showing signs of strength, going for pre-market highs possibly. Other than that, I see no reason to be trying to long below view up. And the other short did end up working out. This second retest right here, or I guess first retest of this low. Really go lower? I mean, if buyers can't step in after sweeping pre-market lows, to me that's a pretty big red flag. A lot of times what you'll see is we get V-shaped reversals, right? Like yesterday is a perfect example of that. We swept pre-market lows and we just V-shaped right out of that pre-market low. I mean, buyers stepped in so aggressive that we just pushed all the way back up, like immediately. And so when I see this, when I see a sweep of pre-market lows and buyers just don't have it in them, they don't really V-shape out of it, there's no strength to it, then I see that as a red flag that we could possibly continue going lower. And that's kind of what's happening right now, right? Buyers did step in. We swept those pre-market lows. Buyers did step in, but failed to kind of get that momentum back up, and they just kind of failed right away. Sellers took over. Alright. Back, get it. Bouncing off that pivot point. Pivot point holding that support. What a perfect bounce. There's the V shape. I guess it just wanted to tap into the pivot point. See if it has enough strength though. Kind of tapping back into view up. Kind of zoom this out for now so you kind of see what the structure is looking like. And we got this internal structure here. They can start displacing above that, but we still got view up holding it. Big wicks on the 15-minute chart. Big wicks to the upside. So got these sellers trying to step in at the 200 here, bouncing off the pivot. I mean buyers. Question is now, can they break back inside this 5-minute range? This is the big line in the sand here. There's a lot of resistance here, which is also why I had took that first short down up here. If they can get momentum and start pushing through all this, well then it starts, once we get like above that 372 level, then it kind of starts to get juicy for longs possibly. Again, we got that, we're coming up on 10 a.m., which is kind of, a lot of times we got that reversal area at 10. Seller stepping in again at that. Off the view op. Come on. See, having trouble. Oh, there it is, pushing through view op. Oh snap. Oh snap. Trying to push through view op, tapping that 5-minute low. Trying to push back inside this range. See if it does it. Interesting to see if this is either a sweep or a displacement back inside the range. Either we're sweeping these internal highs. We've gotten through the view op. Now we're at the 200 and the 5-minute. See if this thing there it is, pushing through. Pushing through the 5-minute, pushing through the 200. Looking good for this thing. Looks like it may want to go for those pre-market highs. We got highs up here. See, this may be interesting here. Going for those highs. If this thing could retrace back down, I would be interested in a long. As long as it doesn't take out the highs. Once it takes out the highs, it invalidates it. Well, my entry gets pretty much. Oh, wait. Looks like it wants to go for those highs, though. If I get a little bit of a pullback. Before. Come on, give me a little bit of a pullback. Let's see if sellers could try to push this back down, kind of rebalance itself, give me another chance to kind of get in here. If not, it's fine. It is what it is. But got pre-market highs up there, looking like it wants to go for those pre-market highs. About to take out the highs. What if it pushes above pre-market highs? Well, then it becomes, once it pushes above pre-market highs, it becomes more dangerous for, because initially, if I want a pullback right now, I'm looking for a pullback, I can still have that target of, all right, price wants to go for those highs possibly. Once we take out those highs and then it makes a pullback, well, that could be a sweep. And what happens with a sweep is it could go for lows now. So when it's going for highs, what it likes to do is kind of rebalance itself, pull back to go back up to those highs. When it sweeps highs, what it likes to do is go for lows. So you may just be like in the way of it going for another low. And so you kind of don't want to be in the way of it going for a low because then you get stopped out. So that's why I kind of say it invalidates. I would love to get a retracement back down to kind of that, you know, the 200 level, the beginning of this imbalance right here, the beginning of this initial imbalance to push into that range. Actually, I may still get it. I may get it. Here I thought I was going to be shorting. Yeah, I took a short. I shorted at right here. To push back into this imbalance right here. I took a short at this 339 level. 4 pre-market lows. It's a perfect example. If it would have taken out pre-market lows first, I would have been like not interested in the short. But because we didn't take out pre-market lows, started pushing back up to rebalance, I got back into the, you know, I got into the move to go all the way back down to pre-market lows with them. Kind of same scenario here. I would be pretty much risking the profits on the first trade. So like if this would be a losing trade, it would be just a break-even day, which is fine, but I really like this. If we can. Problem is it has to get through this one. There's another imbalance right here, which it could bounce off this first imbalance. We'll see though. I mean, we are now back above the 200. Remember, like when I was saying initially, for resistance, we got to get through that 5 minute, we got to get through the 200, and we got to get through view up, all in this area. Same goes now when it retraces. Now all that becomes support. So now all that becomes support, and they would have to, you know, my stop would technically be under like these lows. So it would have to get through view up, it'll have to start dumping all the way back down, which just puts it in a way better spot for my entry. Trying to bounce off that first imbalance. I knew that first imbalance was gonna kind of suck because it's the risk to reward would not be worth it for me to take it on the first imbalance. It would have to be on the second imbalance, but I understand that we could bounce off the first one. And I'm more like I'm not like, even though I know it's probably going for those pre-market highs, I still am picky. I want a good entry. I don't want to just chase it and, you know, the risk to reward is complete garbage. You always want to kind of put yourself in the best situation of. That's why you wait for pullbacks. You wait for it to kind of give you the entry that you want instead of chasing it. I mean, there's always another like you know, caught the move on the first short, so there's really no reason to be forcing anything. Because now I'm pretty much on the day, I'm just playing with profits. So all right. Man, all I'm looking for is a retracement back to the 200. That's it. Buyers are just aggressive here. I got my finger on the mouse. I'm getting ready. Kind of building a bull flag here. Setting up for a bull flag, which is good for longs. Kind of in this accumulation phase. The heck? Oh, didn't give me the pullback. Crap. I saw this bull flag setting up. I figured, dude, this is... Come on. Sometimes on these bull flags, I love it when it sets up a bull flag. It comes down and kind of takes out a low here. Takes out the lows and then rips back up. So that could happen too. There it goes. There's the high. Oh, bummer. Actually, it still hasn't taken. There it is. Okay, now it took it out pre-market highs. Man, I was hoping for... Come on, man. See, there are these situations where it just doesn't give you the entry. The first, so, right, the first short, it actually gave me a retracement back into that imbalance to be able to short it. Then for the long, it really didn't give me the same pullback as it did on the short. So, you gotta kind of watch the train leave the station without you. Unless you kind of like taking breakout. I personally, if you're like a breakout, as soon as you saw the displacement in, you could have took it. But I'm more of a person, I really like to wait for that imbalance confirmation. Because that imbalance confirmation gives me a good like freaking entry points to the point where I can pull my entry at the beginning of that imbalance. Just like I did with the short this morning. I put my entry at the beginning of that imbalance so that when price came up, it tapped just enough so that when my entry was at the beginning, it filled me and then dropped right away. Same thing with this. I was looking for a pullback to the beginning of this imbalance for just to tap it quickly and then rip right back up. So same idea, but now look, if we're starting to displace above, like, and I'm talking displace, make sure we like displace above this pre-market highs. Now we could, you know, now price is choosing a direction and you can kind of play that direction. But as a long, I don't know, man. I really would not want a long up here. I would have way preferred a long right where view up is, because then it gives me the opportunity to put my stop below view up, below all these levels down here, so that like we have all this support holding my price up to go to my TP. When I put my entry up here, then my stop has to be below these lows, which is right at view op. So price could very likely pull back, take me out, stop me out, and then rip right back up. So I don't know, it's just a risk to reward. Also, if you look on a higher time frame, right, we're at a resistance level. So price could start dropping from here. We had a really nice bounce off the, look, that pivot point, like, if you bought off that pivot, that's like the best entry of the whole freaking morning. It was the entry off the pivot point. Yeah, you could still, like, the thing about it is, if price really starts to displace, you just run the risk of, for me, it's, whenever we take out highs, right, we have pre-market highs up here where my cursor is, so whenever we take out highs, you just run the risk of it pulling back and going for a low. When you see price wanting to move toward a high, you kind of have that idea, all right, price looks like it wants to go for the pre-market high or the pre-market lows. And so you can wait for that pullback to get you the good entry, good risk to reward to target that level. Once we already take out that level, then it's kind of more of a red flag of it. Do we continue to displace and go higher and make higher highs? It's possible. It just makes it a little bit like lower probability, but you know, that's what trading is if you're willing to take the risk. You may be willing to take the risk on a trade when another person isn't, and you know, it's completely fine. We could start displacing here. We could easily start, I mean, the way buyers stepped in, we could start, you know, really continuing the uptrend here. I really like to position myself to where my stop could be below the view op, because a lot of times that view op holds price up so well that it's just an extra level of defense. Like, it's almost like you have a fortress and you have this extra level of barrier, right? You have this wall and then you have another extra level. So it really, like, it holds price up a lot of times. And if you pair it with other levels, it just becomes like a really nice setup. Curious to see, so if you would put your entry, I mean, that's not a bad entry if you would put it, you know, at that like 420 level. Not a bad entry. We could kind of tap into that imbalance and continue going up. But like I said, like, it's just, it becomes more risky because your stop would have to be below the lows, which this could very likely sweep these lows and then kind of go back up. And yeah, that's why you gotta, like, one of the, what I really pay attention to every morning is two levels: the 5-minute range and pre-market low and pre-market high. Those are three levels that three confluence, three levels, whatever you want to call it, that I really pay attention to every morning. Yep. See, this is what I'm talking about. This is exactly what I'm talking about. Once it takes out a high, it becomes a lot dangerous for a pullback level, because you can get that sweep, and you could, because it already took the high, it may want to go for a low now. You just don't want to be stuck. You don't want to be in the way of price going for a low. because then your stop ends up being the low, and then you just get stopped out on a trade. And that's also why I said once it takes out, like I wanted to get long down here. Once it takes out those highs, my long gets invalidated. I don't even want to be long anymore. Because now, I mean, what am I supposed to target? Price now could easily dump all the way back down to the downside. All the way back down. It could sweep this low, or if it fails, it could go down even lower. So you just like, you put yourself in a position where your stop just, either you have a really wide stop where the risk or reward doesn't make sense. That was I'm not gonna lie, that was a pretty crazy drop. We're going to 480s. Yeah, and we had that low down here. I mean, it makes sense why price, like I said, price wants to possibly go for a low. So now you see price took out that low, right? Was bouncing off the what? View op. I mean, it's pretty much a perfect bounce off the view op. And now we're buyers stepping in aggressively again. And now you think about it, if buyers can't hold this up and continue pushing it up, then sellers take over again. And now, I mean, where do we go from here? If we can't hold this high here, where previous resistance becomes new support, if we can't hold this level, we continue going lower. We have a imbalance all the way down here. If we inverse that imbalance, we go all the way back down to pre-market lows. And that's kind of like how I look at it. And that's another reason why I don't, like I said, like I don't want to get long here, is because we've already taken out the high. So what am I going to be targeting? Price may not even want to go back up there because we already took out that high. Coming up on that 1030 mark. We do get reversals at 1030, so it's possible we could be starting to set up for a reversal. Now you got, like, for a long wise, you got this massive ass imbalance right there that your price has to get through to go higher again. So now this becomes another barrier for price going higher. Because the people initially that shorted into this, all this volume that came up, when price pops back up, sellers start to come in back again aggressively again. Could be a lot of orders sitting in this imbalance for a short. You're in it for a long? I hope it works out for you. I mean, I just view it kind of as a red flag when we haven't tapped into that imbalance yet, so the price could pop up. And we're at the view op in 200 right now, which is kind of the line in the sand. If price can't hold this level, we're going lower. Where are we on? Check out some higher time frames again. 60-minute, holding that 200 level on the 60-minute. So we do have support on higher time frames. You know, we are above 200. The 5-minute, we have some, you know, we have some, what do you want to call it? Freaking imbalances here. So you see price retraced, tapped into that higher time frame imbalance down here, took out that low, big 5-minute imbalance, and buyer stepped in again. So now we're kind of pushing into that 1-minute imbalance. So now sellers trying to take a step in again. I told you, sellers are gonna, I could push into that imbalance and sellers try to take over again. But if we inverse this imbalance, then that's a really good sign. If we could get if you can get a 1-minute candle to close, that starts to look really good for the upside. But as of now, they're still holding it down. See, something like this could be a good scalp for the imbalance, right? So if somebody kind of sees this low, right, volume steps in, price sweeps the low, buyer starts stepping in, and somebody kind of just scalps price right into that imbalance, that's possibly a good scalp. You know, because you figure now it's like this imbalance was created, right? Now we're going to try to tap into it. We swept out that low. We're going to try to tap into it, and boom, tap into it, take profit. Like, a trade depends on how much you're risking, where your entry, like where your take profit is, where your stop loss is. You just have to structure it in a way. Like, this could very likely have been a very good trade if somebody had a setup that they could, you know, your risk is this low down here and all you're targeting is the middle of that imbalance. So you technically have a 1-to-1 risk to reward. You're putting yourself in a, you know, a nice spot. But if you're like, your stop is this low down here and you're trying to target all the way up there, like, I don't know, it's just 480 possible today, and then 531 in the next couple of days, right down. Yeah, we'll see. You said 480? I mean, yeah, if price holds this up and we start inversing this gap, I mean, we've already taken out pre-market highs, so if price confirms that it wants to continue breaking above pre-market highs, starting to displace above it, we could very likely go for that 480 level, right? And it's not really that far away. I mean, I think we go for it if we inverse this gap here. Let me actually draw this imbalance out. But also, right? Also, something to keep in mind: 430. I mean, sorry, 430. 1030. Based on, I'm sure if you've been trading NASDAQ for a while, if you've known, 1030 is a reversal time, like, is a time frame where price does love to reverse. So another thing is, I would not be surprised if we come up, take out this high one more time, and then reverse off of that. It's just the time it is right now. 1030 being a time where I've seen so many reversals happen at 1030, where I'm telling you, like, it drops all the way back down. I've seen it so many times that I pay attention to time frames. I pay attention to 10 o'clock. If I'm in a short and it's 10 o'clock, I understand that we could get a pop and we could get a reversal. So I'm very careful. Also, I understand 1030, that if I'm trying to long and it's coming up to 1030, I'm extra careful of, you know, it possibly reversing. So once we inverse this imbalance, we could, I mean, that high is pretty much in place to go target. So if you're in a long, I wouldn't be too, obviously do what you want. It's not financial advice, but like me personally, I wouldn't be too greedy. You don't want to put yourself in a position where you have good profits and then you fail to take profit and it reverses back down and stops you out. Then it's like, that puts you in such a bad spot mentally. That's happened to me before. I'm like, man, let me hold this. Let me hold this. And it hits my area where I would have taken profit and drops all the way back down and stops me out. And I'm like, If I would have just not been greedy and took profits. And after that, I've gotten burned a couple times like that. And after that, I'm like, man, I'm a base hit trader. If I can snag a good probability base hit, I'm taking it. And plus, NASDAQ is a pretty efficient market, right? So this is the line in the sand. See what happens. All right, dropping it back down. Cannot close above that imbalance. Holding it to take it lower. And that's when you're, my opinion is, when you're in a trade, you have to look for every reason that price is going to reverse. Right? Like if this imbalance wasn't here, then you're like, all right, price could go for these highs. But because that big imbalance is there, that's a big level that price has to get through to go to those highs. And so if I'm in a trade and I can take a 1-to-1 and my target be this imbalance here, I'm taking it. Me personally. Back to view up. My problem. It used to be my problem until I got burned a couple times, and I'm just like, and you realize just like small losses, like, right, they say in trading not to have your stop loss too tight, because what happens is you just keep getting wicked out, right? If you're not allowing price to breathe, price just takes you out. So just like it's a death by 1,000 cuts, right? That's exactly what it is in trading. When you have such a tight stop loss, death by 1,000 cuts, and you're just keep getting stopped out. All those little stop losses keep adding and adding and adding and adding. Now flip it on reverse side. Base hit trades also add up. If you could put yourself in a position for a good entry, high probability base hit trade, that's all you need. Like, you don't need to be the trader that tries to target some crazy amount and tries to get like a 1-to-5 risk to reward. If you can take 1-to-1 base hits consistently, that's all you need. I mean, what else do you need? What more do you need? Like, have a mindset of look for every reason that price could possibly reject. And like, there's certain time frames, it's a moment of time, right? There's certain periods in price action where you're looking at your entry, and I've had this before. I'm looking at my entry, and then I'm looking at a high, and I'm like, bro, there's no gaps. There's nothing in the way of price stopping, going to that high. And so a lot of times when there's nothing in the way, what you'll see price do is it just like, it'll go higher, and it pretty much immediately goes to your take profit. But when you have gaps, when you have resistance levels, when you have all these levels in the way, you'll see price come up to it. Sellers will start to step in. Price starts to pull back. Then sellers can't hold it. Then it starts to break through that first level. And then it starts to go to maybe an imbalance. Then it taps into that imbalance and starts to reject off that imbalance. Not taking profit. I was shitting on myself. Yeah, that pullback was pretty some pretty deep pullbacks, not gonna lie. Like this one candle here and then this other candle here, like that could freaking, yeah, that could definitely make you shit yourself. This like insane pullback. Right, but you gotta kind of expect that could happen. I mean, this first one was unexpected. The second one was kind of expected because you had such a big imbalance that was left behind, and you figure there's probably a lot of orders resting there, so you get that flush back down again. But failed to take out the low, so failed to make a kind of a new low, so that's a good sign. It's almost looking like it's forming a bull flag, right? If you could mark out a bull flag, like a starting formation of a bull flag. Because when you fail to take out highs like that and you get this type of price action here, I mean, that's a textbook bull flag right there. Now, will it hold and just like, we'll see. I mean, it's a good sign for bulls, not gonna lie, but you know, again, with bull flags, you gotta be careful with them because a lot of times price likes to take out lows first. So it's not as simple as just getting in because, oh, it's a bull flag, so it's gonna go up. No, a lot of times price does like to form a bull flag, start to drop, take out maybe these lows down here, so it takes out the lows, flushes, and then pops right back up to go higher. But again, 1030 mark, so there's just like, yeah, there are these times, man, where these pullbacks happen and you just freaking shorts later on. Yeah, if it breaks below VWAP and displaces, then right, shorts would be in play. But as of now, it's long territory pretty much. This is bull territory. So trying to short here, also you're going against the bulls. You're going against momentum. You're going against just market, you know, the direction, general direction where market's kind of. Here, give me a second. I'll be back in like a second. There's a literal, there's a freaking cop parked right outside my window. I got my own private security. Or they're trying to bug my place. Cops. Yeah. I don't know. It's kind of weird. FBI, open up. I'm done for the day. Took a limit buy after that pullback Did me justice. Nice. Nice. Took a base hit. Waited for the pullback. Great trade. What's a good time frame to pass an evaluation, would you say? There's not necessarily a good time frame, but always what I would say is always pay attention to higher time frames. Like, pay attention to where price is generally, right? Are we at lows? Are we at highs? Are we above the view op? Also pay attention to the... Oh, what the... Oh. Yeah, so pay attention to generally where we are. View op is a good... This is just like... So every person has different confluences, different things they look at. So there is no like one thing, you know, is the best thing to pay attention to. Me personally, the couple things that I really pay attention to every morning, right? 5-minute range, pre-market high, pre-market low. So I go on 15-minute time frame every morning. If you watch me, I'll look at the 60-minute time frame, see where price is doing, where the 200 EMA is. I'll look at the 15-minute time frame. I'll look at the 5-minute time frame. Then I'll wait for the first 5-minute closure. I'll mark out the first 5-minute high and low, which is these blue lines you see on my chart right now. Mark out the 5-minute range. Then I mark out, I look on the 15-minute and I see where pre-market high and pre-market low is. So when we start breaking to a certain direction, if we're below view op, I'm like, all right, we could be wanting to go for pre-market lows down here. So if I get a setup and I could set myself up to go for a specific level. So you gotta have to look at all time frames. There's no one time frame that you just can look at and it just be perfect. You have to look at different time frames. The hourly chart, the 15-minute chart, the 5-minute chart. Where are imbalances? Are there any imbalances the price could pull back to? If you're in a long, are there any, like maybe there's a massive imbalance on a 5-minute chart. You want to know that so that if you are in a long, you want to set your TP in accordance. But I mean, it's also position sizing, right? You don't want to be too aggressively. It depends on your skill level of trading. Some traders, you know, trade aggressively with evaluations just to pass them because they've been trading for a while. They got good setups, so they can kind of go hardcore on one setup. Like, if you're not like the best trader, I would personally like just size down and just take it easy. You don't have to pass an evaluation in one day. Like, don't risk, you know, allow yourself to be able to take multiple losses, dig yourself out of the losses. Like, allow yourself a month to pass an evaluation. Just build your way up. Trading is all about patience, right? Patience is the thing that makes or breaks a good trader from a bad trader, right? Perfect example of patience this morning. Initially, I got a short setup. I marked out the 5-minute range, right? I saw pre-market lows down here. Price started to displace below this 5-minute range. Not only did it close below it, started to displace below it, left this imbalance. So now I put my entry at the beginning of that imbalance, looking that, all right, price hasn't taken out pre-market lows yet, so we could pop back up. I can get a good entry, good risk to reward to try to target that pre-market low range. And it's exactly what happened, right? Price popped up, filled my short entry, and then immediately went to pre-market lows. Right? Fast forward, where we took out pre-market lows, we started to pop back into this range. Now it's popping back inside the 5-minute range, right? And I'm looking like, all right, now price looks like it wants to go for pre-market highs, right? We're breaking view up, breaking the 200. We're forming an imbalance back inside this range. That's a green flag for me. We could want to go for pre-market highs. So I had a entry there, right? The beginning of this imbalance, waiting for a pullback to go for pre-market highs. But guess what? Patience, right? The first trade, patience worked out. Second trade, it just kind of left without me, because I wanted a pullback back into that imbalance here. and just ended up missing out on the trade. And did I really miss out on the trade? No, because obviously I'm not going to enter up here because the risk to reward would be complete just garbage. Like, there's no reason. And so didn't really miss out on the trade. It just didn't give me the entry that I wanted. Even though I figured, I'm like, this is going for pre-market highs. So what I'm getting all that is patience, patience, patience. That's all that matters in trading is patience. Like, you'll hear traders say, the less I trade, the more I make. I don't know why it's like that in trading. Is because you're just more patient for better setups. Instead of chasing every little move, you're just waiting for good setups and you're taking it and moving on with your day. If you take a loss, guess what? You move on with your day. It's trading. It's not, you know, the only thing that can get you out of the game is if you keep blowing accounts, and you lose so much money that you can't continue to trade anymore. And trading is all about experience. Just like any other business, any other profession, it's all about experience. The more experience you have, the better it is. That's why, I mean, I've been trading NASDAQ for 3 years. That's why I can come into the market and I can say, be careful, 1030 time frame, it could reverse here. Be careful, 10 a.m., we could get a pop back up, right? 10 a.m., I knew we could get a pop. Look what happened, 10 a.m., V-shaped reversal after sweeping pre-market lows. We were chopping here. I said, be careful, 10:30 time frames coming up. We could get reversals around 10:30. And what do you know? It's like just starting to kind of, you know, try to go down now. We haven't got a massive reversal, but it's like these things that you know, being greedy. Don't be greedy. It's something I learned with experience. So trading is just a lot of experience, and the more you learn, the better you get at it. And really, don't compare yourself, right? The saying goes, comparison is Comparison is the thief of joy. So, like, don't be the person that compares yourself. It's very hard, especially in the day trading space, where you begin to compare yourself to other people. Stop comparing yourself to someone who's making a lot, like making $20,000 days. Like, you know, you're comparing yourself to a person who's been doing it for like 10, 11, 12 years, and you've been doing it like, you know, 1 year. You can't compare yourself to that person. You're at a whole different level. If you continue to be disciplined and continue to learn, you eventually can get to that level. I appreciate the likes. Thank you. It's just I think we in the 21st, like 2026, we have this like horrible mindset of everybody wants this fast, like we live in this culture of like one viral video, the person blows up, the person's freaking, you know, live streaming, he's freaking making 100K a month. This like fast success, it's very deceiving. That's not what life is, right? It's not about fast success. That really doesn't happen. And so people see that, and then they come into trading and stuff like that, and they're wanting fast success, right? They're risking everything on one trade. They want to hit that one perfect trade that's going to pass the account, then hit another perfect trade that's going to get them to this level, and then they take a big payout. Like, it just doesn't happen. Most likely, you're just going to keep blowing and blowing and blowing accounts. How long did it take you to understand trading? I mean, it's not like a thing where you just like out of nowhere you just like boom, I get it. Like, I get trading. It makes sense to me, right? What it is you start to trade, right? You start to lose a lot of money. You start to ask yourself the question, how am I so good at losing money? I've asked myself that question, especially in trading. You're like, how am I just taking a loss after loss after loss? So you begin to lose money. Then you begin to make some changes in your trading, right? You're better at risk management. You're like, all right, I'm losing. I keep getting stopped out. Let me take base hits. Let me be more patient, right? And you get a little bit better, right? A year goes by and you look back and you're like, you know, I'm still losing money, but I'm getting better at it. I'm improving from what I was a year ago, right? Then you trade a little bit more. Then you start moving into kind of the break-even stage because now you're getting disciplined. Your risk management is better. So now you're kind of moving to that break-even stage to where you're not making money, you're not losing money. You're just kind of like, you make money here, you lose money here. You make money here, so you're just break even. Then a little more time goes by and you learn something else. Then you kind of, and so it's always a growing thing where you're always improving. There's not one point where you're like, wow, I get this. This makes sense. It never comes to that. You just look at one thing for so long that's why I understand. I pay attention to the 10 a.m. time. I pay attention to 10:30. I pay attention to big imbalances. I pay attention to where the view op is. I pay attention to higher time frames. Like, there's so many things that you begin to pay attention just from experience because you've seen it happen, that it's just a learning process. And that's why trading is hard. It's not something that you can buy a course from a YouTuber and I will make you profitable in 1 month. It's not how it works. For one, that's not how it works because markets are always changing. Something that works really good may not work really good in the next, market cycle, to where you need to adapt. You need to be able to adapt. Like volatility, there are times, if you were trading when the tariff news came out, the markets were freaking wild. I'm talking about like the swings were so freaking crazy that a bunch of people just kept blowing accounts. Because we were just, the volatility was absolutely crazy. And so it's like, that kind of market cycle comes in, and if you don't have experience to be disciplined and sit on your hands and be patient and possibly not even take trades, then you're just gonna blow everything you just worked so hard for. You gotta be able to adapt. That's why I laugh when somebody's like, I've been trading for 6 months and I'm a profitable trader. Like, no, you're not. You haven't been through enough market cycles to call yourself a profitable trader. You could be profitable for 6 months and out of nowhere, tariff news comes out, market starts going crazy, price action starts to go insane, and then you blow everything you've worked so hard because you've never been in that. You don't know that. That's a time where you need to really scale down and sit on your hands and be very patient. I don't want to be the person that says, oh, trading is like, trading's easy. Like, it's very difficult. It's insanely difficult. Partially because it's a battle against yourself. You are your own worst enemy when it comes to trading. And the hard part is, right? Like me personally, I allow myself 2 losses in a row, 2 trades in a row. If I take 2 losses in a row, I'm out. I walk away. There is no more trading that day. Absolutely not. And the hard part is when you take a loss and then you take another loss, the hard part is to walk away because everything in you is freaking screaming to continue trading to make back that loss. And even me trading for 3 years, I still get those urges to try to make back the money, try to continue trading. It's like, but you have to be able to control yourself, and that's where discipline comes in. And that's where you'll hear traders also say you have to be disciplined in your everyday life. Discipline. Are you the person that's going to the gym? Are you the person that's disciplining yourself in everyday life? Then it becomes easier to discipline yourself in trading. But if you're just a sloppy person that you're not disciplined in anything in life, when it comes to trading, that's going to bleed into your trading. You're going to take a couple losses. You're not going to have the discipline to control yourself, and then you're just going to blow your account. And that cycle is going to keep continuing on. I know it's easier said than done. It seems easy. You're just like, stop trading. But I think we all know it's a lot harder to do than... It's a lot easier said than done. So... Alright, what is your strategy? Initially, my strategy is pretty much a break and retest strategy. So 5-minute range, when I see the market make a certain move and I see price wanting to go to a certain level, like this morning, right? When we broke this 5-minute range and we had this imbalance, we broke below it, started to displace below it. I'm like, all right, price is probably wanting to go for those pre-market lows. And so I waited for the retracement back up to go short. And we had view op, and we had view op holding it down. So pretty much a break and retest when we have some kind of area That price breaks through, comes back, retests it, and then continues going to a certain level. Yeah, I'm working on that. I've blown 5 accounts because of my discipline. It's something we all go through. Like, don't beat yourself about it too much. We all go through that. The amount of accounts I've blown, like, I'm not, like, in that stage anymore. I don't really blow accounts. In all of my trading, I've blown 1 set of funded accounts. This is my 2nd set of funded accounts that I'm not really, like, going, even evaluations. When I was beginning to trade, I was blowing a lot of evaluations. Now I don't really blow evaluations anymore. Like, if I need to pass an evaluation, I'm also disciplined to the point where I kind of scale down. I allow myself time to pass the evaluation. I'm not the person that tries to pass it in one day. I give myself that month to pass it. So I give myself that room. So I'm not really blowing evaluations either. $74 from losing my 6th eval. Yeah, I mean, it's tough. You gotta just figure out what you're doing wrong and kind of just work on that. Always try to figure out what you're doing wrong. If you can make a change in any way, like whether it's discipline, risk management, are you risking too much per trade, right? Are you risking $500 to make $100? Like, that doesn't make sense. So you gotta ask yourself what you're doing wrong. Are you trying to go against, this is some of the questions you gotta ask yourself. Are you trying to go against momentum? If we're above VWAP and we're trending above VWAP and price is making higher highs, are you trying to short that? Are you going against what the market is trying to do? Right, my patience is being tested right now. Losing it, yeah. $74 away. I mean, that's very close. So either just like trade 1 micro and try to work yourself out of it, or, I mean, it depends. If it's an evaluation, if it's an eval, I mean, it's like, you know, I think it's better just to blow that eval and restart than work your way up. If it's a funded account, it's, you know, it's depends on how much. If it's like a bunch of funded accounts, it's better to work your way out of it. If it's an eval, then it's like, you know, I mean, it's an eval anyways, so there's no reason to try to work yourself out of that drawdown in an eval. I once was, I think this was actually, so remember I said I've only blown 1 set of funded accounts. That set of funded accounts that I had blown, I remember I was $20 away from blowing the accounts. I was trading this was a while ago. This was a while ago. So I took a perfect trade. I was $20 away from blowing those accounts, and I took the absolute perfect trade. And it's just like, as soon as it hit my order, price just reversed off of it. And I ended up working my way out of that drawdown. But I still ended up blowing the accounts. But it was pretty crazy. 3% a month trading 2 to 3 times is solid return. Yeah, it is. It's right now, a lot of people are blowing it out of, like, people are making it think like you got to have like a 500% return on the month. It's just like, yeah, in eval, in prop firm world, you can do that because you're investing so little and your return can be absolutely astronomical. So prop firm world, yeah, but in the real world of trading, like, a 3% month is considered a good month in the real world of trading. And that's being kind of a conservative, right? You're not risking a lot, you're disciplined, and those are the people that typically last a long time. But at the same time, you got to have a big capital, right? In the real world, not prop firm space. In the real world, you got to have a pretty big account to put yourself in a position where you can kind of like make 3% a month and be able to like live off of it, or, you know. And more hard when you gotta go work. Yeah. I'm a big proponent of trading should never be your only source of income. I don't think trading should ever be your only source of income. Just my take. There's no reason, first of all, for it to be your only source. I mean, trade in the morning from 9:30 to 11 o'clock. There's no reason for you to sit on the charts all day. And you want other businesses or something you want to do. Figure out what hobbies. Trading should be the avenue to give you freedom to do other things. Start a business, do something like, but it should never be your only source of income. And when you have other sources of income, it takes the stress off of trading. You don't have to rely on it. You're like, you know, it is what it is. If I have a break-even month, then I have a break-even month. It's fine. I don't really care. But if you're putting yourself in a position where you're relying on trading to pay your bills, man, it could be a nasty decline in your trading, because you begin to force things. When you're relying on trading, you begin to force things. Now, if you're at a level in trading where one trade pays for a month of bills, that's completely different, right? If people are in that position where, you know, they're making the money where one trade can pay off their whole month of bills, then they can, you know, kind of make trading work full time. But if you're like, you need to make money a certain amount per week, and it's not a good spot to be in. To manage patience because I want to be green before work, then yeah. Yeah, I think you got to get that out of your mindset. Like, I have to be green. Like, there are going to be red days, and you got to be fine with... You got to get into the mindset of... And this is kind of what my mindset is the only way I can have a bad day is if I break my rules, right? If I break my rules, if I take stupid trades, that's the only way I can have a bad day. I can even have a green day and it be a bad day because I walk away and I go... I have a green day, but I didn't follow my rules. I kind of took this stupid trade. I shouldn't have even took that trade. And it ended up working out, but it was still a stupid trade. So it's like you still have a bad day even when you're green. But when I follow all my rules and I have a red day, I'm happy because I followed my rules, right? That's risk management, being patient for the good setups. And I can walk away happy even though I had a red day as long as I followed my rules. And advice for rich kids: just turned 19 and father gave me access to you. You gotta be trolling. There's no way that's real. That's gotta be a troll, but if you're 19 and you have that kind of access, I would take away that access because you're probably gonna lose everything. Nobody should trade at a live account. If you don't know what you're doing, you should not trade in a live account. It takes years of experience before you can start trading in a live account, my opinion. And we're going down. Told you that 1030, be careful that 1030 reversal. We started to kind of chop around 1030, and where was 1030? This first high right here. Look at that, 1030. This leg up right here. Right here. We made this high. We came back up. This is 1033. We took out this internal high at 1033, and then that was the high. That was the high of... Well, we had this high, but that was pretty much the first initial leg, starting leg down, where we kind of took out this internal level, and then we started trending down at 1030. You waiting for a trade? I already took a trade. I took a short as we broke down below 5-minute range, tapped back into this imbalance. And I took a trade to pre-market lows. So I took this short down here. Then I tried to take a long, but when we kind of broke back into this range here, but price never gave me the retracement to go for the long, so I didn't end up taking the second trade. And then after that, I just been flat. There's not really anything to do anymore. We've already taken out pre-market highs. We've taken out pre-market lows. Price has just gone sideways. So in my opinion, there's really not much to do here. I'm about to walk away. Kind of a one and done day. One good trade, walk away. But starting to kind of, you know, we've been holding this view op down here. We've been holding view op. So also 5-minute range. Look at that. We've pushed back down. Look how perfectly we've tapped off that 5-minute low. Something to pay attention. Pay attention. Like this 5-minute range, I'm telling you, like it's a good gauge. When you pair the 5-minute range with the view op, man, it gives you a good idea of what price wants to do. If we're stuck inside the range, it starts to chop. When we have pre-market highs and we start to break outside the range, I'm like, all right, this is looking good for a long. We're above VWAP. We're breaking out of this range. Price is looking very bullish, and you go with momentum and you make money, walk away. But it's 11 o'clock, so honestly, it's a good time to walk away. We're getting into the hour of chop, right? This is hour where you get morning session, 9:30 to 11. You get this really good price action. Then after 11 o'clock, price action volume starts to kind of trickle down. You don't get as good price action. And then power hour is the best time also. You get the last hour of the day. I don't trade during power hour. I've never have. I just kind of, I'm a morning. I make my money in the morning. You know what I've been actually thinking about? Getting into, there is a prop firm with crypto. I think it would be kind of fun to start trading at night with crypto. With prop firm. Something I may think about doing. Going live at like nighttime. And just kind of, it depends how crypto, if crypto moves well at night, I would have to see how it moves at night. If it moves good at night, this would be a complete learning experience for me, because I've traded crypto. I've actually made money with crypto, but it's been like it's not been day trading. It's been holds. So it would be kind of fun to experiment with it. Here, give me a second. I'll be back. All right. I think I'm gonna call it. It's 11 o'clock. We're kind of just holding view up. We're just kind of chopping around in this 5-minute range here. So I gotta get back to work. I don't eat breakfast, so I gotta go grab something to eat and then get back to work. Another busy day. So, all right. Been on for what, an hour and a half, so I'm gonna hop off. Y'all stay safe. Don't do anything stupid. Don't take stupid trades. And I'll be back tomorrow. Peace out.